If I sell an investment and realize a big capital gain, will that push me into a higher tax bracket? This is a great question we received from a new client who has a significant amount of assets in her former company stock. At Brandywine Oak, we hear this one all the time. And the short answer is capital gains can certainly increase your taxable income, but they don't push your other ordinary income sources into a higher tax bracket. Let's break it down. The US tax system is progressive, meaning different portions of your income are taxed at different rates. If you earn more, you don't pay a higher tax rate on all of your income, just the portion that crosses into the next tax bracket. Now, capital gains, specifically long-term capital gains, meaning those on assets held for over a year, are taxed separately from your salary, bonuses, or business income. The current long-term capital gains rates are 0%, 15%, or 20%, depending on your total taxable income. So here's what can happen. If you realize a large capital gain, say from selling a rental property, a concentrated stock position, or even company equity, your total income goes up. That may push a portion of your capital gain into a higher capital gains rate, like from 15% to 20%. But your ordinary income, that stays right where it is. The capital gain does not retroactively increase the tax rate on your paycheck or other ordinary income sources. At Brandywine Oak, when we run our tax projections for clients throughout the year, we're not just looking at capital gains in a vacuum. We're always asking, will this gain cause more of your Social Security to become taxable? Will it trigger the 3.8% net investment income tax, also called the Obamacare tax? Will it bump up your Medicare premiums the year after next? All of that matters in running the numbers. In general, the more we can spread out income over multiple years, the better. Here's a quick example. Let's say you're married filing jointly with $150,000 of ordinary income. If you realize a $100,000 capital gain, you're still comfortably in the 15% capital gains bracket. But if your gain were $500,000, part of that gain would be taxed at 20% because you'd crossed the threshold, currently about $584,000 for joint filers in 2025. So yes, capital gains can push other parts of your tax picture higher. But no, they don't increase the tax rate on your regular ordinary income. If you're thinking about selling something significant, whether it's a stock, second home, rental property, or a business, be sure to get a professional involved. Reach out to your advisor or talk with our team to see how we can help.